Welcome back to the Gold and Alternative Investment Conference. And those of you that follow me all the time know that back in July, E.B. Tucker and I had a conversation, which we are going to continue today as we are coming at the end of November. We're going to talk about all things gold. We're going to talk about real assets. We're going to talk about Nova Royalty. We're going to talk about Metalla Royalty. But those of you that don't know, E.B. Tucker is a director of Metalla Royalty and Streaming. He is also a director, which we're going to talk about, Nova Royalty, and he's written a book called Why Gold, Why Now? The War on Your Wealth, which we'll talk about too. EB, great to see you again as we come to the end of a crazy 2020.
Thanks for having me back.
Let's start off right now. You know, we've spoken about this before. Governments are printing the funny money like crazy. Currency is being debased. Wall Street overnight has roared even higher into the 30,000. Speculators are piling into the stock market, and the gold price is pulling back. So people are getting a little bit nervous. I'd love to hear your take on both of those sides.
Yeah, so Joe Biden is the selected leader for the coming years. He's going to be presiding over a weak dollar period. So the U.S. is in. This is what people need to see, is that you're already in a weak dollar period. It's going to be a time when the dollar is underperforms the other currencies. So what does that mean? Well, what it means is that you got to check the weather. I mean, if it's forecast as rain, you take an umbrella. I mean, so this will be a period where trades that benefit from a weak dollar. Let's get it on a basic level. You're in Australia. You want to visit the U.S., wait about 18 months, book yourself a nice trip to California, and it'll be cheaper, because this is how you go into a period of like the dollar, struggles against other. So the U.S. becomes a cheaper place to visit. That's as simple as I can put it. Now, when that happens, commodities do very well. Okay, so gold ran up first. So gold went to 2080 or something, to a new high first. But since then, copper ran up 330 or better. Nickel ran up into mid sevens. Sugar is way up. Okay. Yeah. So soybeans way up. So oil is actually doing okay. I mean, oil, in the WTI in the mid 40s. Okay. So stock market is up. So weak dollar period, there's certain beneficiaries in that period. And one of them is not cash, by the way, because the cash goes down. Now, when you look at the gold market, okay, let's talk about a couple of things. Because number one, first and foremost, let's clear the air, is that I'm currently in the penalty box, because after 4 or 5 deadly accurate calls on the gold price, I've got a call that looks like it's not going to come to fruition, which is for 2,500 at the end of the year. And that's okay, because let's look at, the fact that it's difficult to predict the future. And, 4 out of 5 ain't too bad. So Metalla has done quite well. Let's look at the reason why Metalla has done quite well. The gold price is down today. The gold price is higher than it was when you go back and look at a chart. It's higher. So you're looking at it on a daily basis. You're giving yourself a stomach cramp. I mean, so where's the gold price headed? That's the question. Now, we went back in my book, which Why Gold, Why Now? There's a lot of these things we talk about. I explain in easy to read detail what they mean, which is important for people to know. So if people haven't read the book, I would suggest referencing the book after you watch this.
Well, and also, before you go on referencing the book, you wrote the book in 23 days.
23 days, yeah.
And yeah. What I like about it is, ladies and gentlemen, if you don't understand about gold and the thesis behind gold, why you should actually have some of your assets in gold, you need to buy the book. And it's on everything. It's on Amazon, Booktopia, Kindle, everything. It only takes about 5 hours. It's the best education. And everybody I speak to, EB, I say to them, get educated. So just
well, it's on Audible. It's funny you say 5 hours. On Audible, I'll read it to you, and it takes 5 hours, and that's it. And it's me reading it. So okay, So there's a part in the book in the third section where I talk about the futures market and the physical market, and I explain to people in detail that your Aunt Lucy, who has never traded a stock, could still understand this, is that you have the price is normally very close to the same. And what that means is that you can buy a contract for gold delivered in the future, and it's not very much more than today. This disparity went extreme in the second quarter, extreme, like as high as $80. It was really wacky one day, and there's all these news headlines about it was because there was not enough flights back and forth, London to New York, and size of the bars is different. It's nonsense. Okay, so I think that the gold market became very difficult to control at that price level, $14, $15, $1,600. And so it moved up to 2080 and sucked a lot of people in. Okay. And now it's at 18 something, like low 18s. And you've had just barbaric selling since the election day, where you just boom, boom, boom. And the futures contracts expire. Okay. And they effectively expire, some of them expire worthless, because there were bets made for future delivery, and then the price dropped, and then they expire with no value. Okay, so that's what you want if you are a trader that has a lot of exposure, because you don't even have that gold. I mean, you sold all those contracts, you just don't even have any gold. So I mean, you can't let those things expire. Now, I want to be clear. I am not alleging nefarious activity. I have no axe to grind with commodities desks. I've been a professional licensed money manager and trader. Market is the market. There's no such thing as manipulation. If the price of Rolexes was held down by 50%, the smart way to fight that is to get on your horse and go buy a Rolex right now. Okay, so you wouldn't be complaining. I can guarantee you wouldn't be writing a nasty message board post about those evil Rolex makers who have suppressed their price. Okay, so my point is, if you think the gold price is suppressed, go buy some gold, because that's the best way to fight price suppression. But what you find when you have a lot of time in the business is that markets have major players, and they have derivatives. Like, I mean, there's a lot of ounces of paper gold trading in the market for every real ounce of gold. And if you're the guy with all that paper gold exposure, sometimes you got to nail that thing, and it's just the way it has to work. So if you're upset about that.
Sorry to interrupt you. Isn't that one of the issues with the gold and silver market, is that the derivatives market controls the spot price?
Absolutely. The derivatives market is huge. It's huge compared to the actual. If the ounces of gold were the only thing, I mean, it would be a whole different ballgame. I mean, the derivatives market is very, very big. And it has been very big for a long time. Now, with financialization, I think it's become difficult to control. Now, I had a chart up earlier. It's not worth bringing up because I have it in my book, of this price spread. And it used to be like $2, $3. I mean, this is the cost of transport. And today, by the way, it's negative $3. That's the price has come all the way back. Okay. Now, this blew up in 2016, and then it was calmed. And it blew up in 17, and then in 18, and then in 20, it blew sky high. So, I mean, if you look at this chart, it keeps getting bigger. And I think that the deal is, each time it blows out, they've got to move gold up to a new level where they can trade it. It gets too hard to trade it at 1,500 anymore, because you can't get the gold. I mean, silver producers at $12 are just like bankrupt. I mean, forget about it. Like, it's not even possible. So, I mean, so you have to get to these levels. And I think this game can go on a little bit longer, and people need to understand that. Now, one more note on this. Notice the headlines that central banks were sellers of gold in the second quarter, and notably Russia. Now, in 2006, the Russian central bank, this is from my research on the Bloomberg, had about 12 million ounces of gold. And then in 2020, they had 120 million ounces of gold. Okay, they bought gold the whole way up. They did that as part of their reserves. That was like a very common thing to do, by the way. And so they sold about 3.5 billion worth of gold in Q2, which is just over 2 million ounces. I mean, if you figure You don't really know what the prices they got for it. Ironically, that's exactly the time when the major blowout occurred. So I really start to wonder, was there a deal made that was like, can you
Push.
sell some physical into the market, liquefy the market, help us settle things down, goes up, we'll give you something else. It's just, this is all horse trading. Okay. So I just think there's too many coincidences. They haven't sold gold in a long, long time, like a many, many, many years. And I don't think they have any reason to sell gold. They're not like, because remember the U.S. sanctioned them in 2000, I think 14. I was there in 15. I saw it myself. And it actually backfired in the U.S. because what happened is the Russians couldn't sell debt externally. And so they had no choice but to calm their budget. And that was a really difficult time. And so they did that, and then they started generating surpluses and investing in infrastructure. So, I mean, as far as sovereign finances go, I mean, the Russians are in far better shape than a lot of the Western nations are, that's for sure. And so I really scratch my head and say, why so much media outcry of central banks are selling gold? It's not really, I wouldn't really call that, dumping gold onto the market. I mean, that sounds to me more like calling up Uncle Vladimir to solve a problem and saying, remember that thing you wanted, okay, we'll give that to you, and you'll do this and whatever. I'm speculating, but I think there's a lot of coincidences there.
Look, I think there are coincidences, but right now what we're seeing, and it's a very different market than what it was even a few years ago, because of course 2020 is the corona time, and all the governments globally have just turned around and said, let's start printing what I call the funny money out of thin air. So I look at this and I say, well, that means that real assets, property, the classic cars, maybe art, all of those are not necessarily going up in value, but they're going up in price. And so you look at that, and I've heard you speak about property and say, well, you've got to look at the net value, after you take out all the costs, and maybe property isn't such a good investment. But what do you say to people? I mean, here in Australia, they're obsessed with property, and our market is going up exponentially, ridiculous, like insane prices. And yet the gold price, and you say, look, the gold price doesn't do anything. It doesn't have a liability. But why should people be even looking at gold when they see in nominal terms the price is coming back, yet all real assets outside of that, because I do call gold a real asset, but outside of gold, things are going exponentially higher, including, as I said before, at Wall Street roaring higher, the markets here roaring higher, Tesla on a tear, and people are.
Well, okay. So I'm not negative on property per se. I want to make sure people understand that I have a decent amount of property myself. But people need to understand something very clearly, and forget about the dogma that you've bought into about property. Property is not liquid. Okay, I'm trying to sell a piece of property right now. It takes months, even in a hot market. It takes time to sell it. You might have leverage. I personally don't, but a lot of people have leverage, and they have to make a penalty payment to get rid of leverage sometimes, and closing cost, title agent, lawyers, selling agent. You got to add all this stuff up. Okay, it's not, you can't. I mean, stock market you could sell instantly between the hours of 9:30 and 4.
Yeah.
Gold you can sell almost all the time. I mean, like even on a Saturday when the gold market is closed, gold market's open 23 and a half hours a day from Sunday night at 6 p.m. New York time all the way till Friday late afternoon. Even on a Saturday, you can walk into a jewelry store with a coin, with a Krugerrand, and be like, give me some cash. I mean, you could get on a plane and go to Greece and walk in there and say, give me some euro, and boom, it's done. There's a price on that worldwide, 24/7. It's liquid. There's no other consideration. So you got to make sure that you don't get sidetracked with all this dogma about property. You got to see it clearly, that like, I'm not saying all these things the same. Now, second thing is, in my book, I talk about how much gold to own. My suspicion is the people that are looking for a window to jump out of probably have too much gold, because they got their percentages mixed up. I mean, gold is wealth insurance. In the book, there's nowhere in the book that I'm like, you got to get all the gold. You got to buy as much gold as you can. You got to fill your house with it, and don't don't even eat. You got to only buy gold. So there's nowhere in the book I talk about that, because gold is not really an investment. It's an asset. You could turn it into money 24/7 anywhere around the world, and you don't have to worry about any counterparty. There's no like person on the other side of that. It's just a coin. So you're not looking to make a killing. Now, Metallo, for example, went public 4 years ago next week in Canada at $1.20, and it closed today at $11.68. Okay, so because you and I are all hung up on the fact that people doubled their money since the last interview, but what I'm talking about is
and actually,
almost a 1,000% gain.
Just behind you, I think, is that the share price? Okay.
This is the last interview. Okay, that's this is US dollars, 520 roughly. And then, here in August, a month later, it ran up to 10.
Yeah.
So you didn't quite get a double since the last interview, and you had days to do it. Look, if it took you 8 or 9 days to watch the interview, which is, it's only 45 minutes. So, I mean, you can get through it. That you had all that time. It wasn't like you had 10 minutes to act on it. And it wasn't like the interview, no offense, but it wasn't like the interview set the stock up. I mean, what happened is we bought a royalty on Fosterville in Australia. Yeah. And then here we go. So anyway, people. Okay.
I do want to talk about that a little bit more, if you wouldn't mind.
Okay, so let's clarify that this royalty business is a business in the gold industry. Higher gold prices boost the value of these royalties dramatically. In fact, they boost them exponentially. Yeah. That's different from owning gold. So in the book, I explain you got to figure out how much gold to own first. And I give you some, I don't give financial advice, to make that really clear, but I give you some numbers that I use myself. I start talking about numbers like 3%. These are like really sensible numbers. So if you went like 73%, you might be like upset, and all. Well, look, man. I mean, that's operator error. Okay, so gold is fire insurance for your wealth. The book is The War Against Your Wealth and How to Win It, is the subtitle. Gold is fire. Now, let me ask you a question. You buy a house and you buy fire insurance, and then you're mad that the fire insurance didn't pay off. Well, wait a minute. That means the house didn't burn down. Okay, so this is where you get your wires crossed on gold. You have physical gold as your wealth insurance. A company like Metallo Royalty or Gold Royalty Company is very different. This is a business, and a business that's in that sector. When gold goes up $100, the value of the Fosterville royalty goes up. It's like a lever. Okay, it goes up a lot out in this 30 years of $100. You wouldn't believe what it does to the Excel spreadsheet. Okay, so my point is, when you start looking at your overall picture, and then real estate. Yeah, okay, great. Have some real estate, but just remember, if you're buying $1 million condo in Sydney or something, can you even get $1 million condo? Maybe 2 million.
In certain places,
you get a storage. You get a storage unit. Yeah. So okay, you buy your storage unit for $1 million, and what you got to do is you got to say there's nothing wrong with that. It's just you got to be realistic with yourself that if you're borrowing $900 to buy the thing for $1 million, and the cost to have it is 40 grand a year, and the income from it is 42 grand per year. Okay, you got to be realistic about the return on that. That's 2% return on your equity. Okay, so if you miss a month of rent, you're backwards. So what you're counting on is appreciation. Okay, good. If you get the appreciation, you did a good job with the real estate. But I wouldn't say it's a hard asset, because it's heavily financialized. You have leveraged your way into that asset. A hard asset, it's different. You're not leveraging your way into the gold coin ownership. Okay, so you got to get if you get your wires crossed in this, you're going to be in a lot of trouble, because things are going to happen. And you'll be all confused, because what's going to happen is you bought fire insurance on the shed out back and not the house. I mean, then you have a kitchen fire and the insurance doesn't pay. They say, yeah, well, you bought it on the tool shed. So, I mean, it's your fault. No, it's EB Tucker's fault. Okay. So, no, I mean, nothing's anyone's fault. You got to think for yourself. So, but we're trying to lay this out. My book is not about how to speculate your way to instant riches like it's some kind of lottery scratch off ticket or something. I'm trying to explain 20 years of my life that's been a journey from really pretty basic level. I mean, I wasn't like eating, out of garbage cans or something, but I mean, there were some very hard years, and I explain what the process was like, and it's what's going on in here is the secret. It's
Right.
not some special tip that you're going to get. I mean, I already gave you the double your money in a month. What more do you want? I mean, so it's like, okay, but the problem is that you got to kind of consider totality, the whole picture, everything that's going on. Joe Biden's going to be a weak dollar president. What does that mean? It means a lot. So you got to understand that. You got to understand what the royalty business is and why it matters and when a good time to buy it is.
Okay.
You got to each one of these things. You got to.
Well, I want to
see
dig into that. I want to dig into the royalty business. Now, first up, I want to ask you, why did you start Metalla Royalty, number one, and number two? I can see the leverage, but why? We've got physical gold, and a certain percentage of physical gold people should own as insurance. But let's talk royalty businesses and let's talk about leverage with them. But first up, why did you start Metalla Royalty? And then I want to go on to Nova, but why did you start it? What is it invested in? And why, because it has gone up, it's doubled since we last spoke.
Yeah.
I'd love to hear views on what is, you talked about Fosterville Gold Mine. What else are you involved in? And what is the leverage in this? It's a volatile market.
Yeah. All right. Let me break it down very simply for you, because the brains of the operation, I'm not the brains of the operation. Brett Heath, the CEO, is the mastermind, the genius, the royalty extraordinaire. And I happen to be a close business associate with Brett. We were asset managers, portfolio managers together in the past, and we worked very well together. And Brett came to me more than 4 years ago, and he said, "Hey, listen, I've been doing all this consulting work in the royalty business," because we were in the mining equities for years, so we had a lot of contacts. I found there's like 1,000, orphaned royalties out there. Royalty, by the way, is a perpetual, non-dilutable carried interest in a resource asset, like 1% of all the gold that ever comes out of the ground. Okay, this is how it works. It's very simple. And Brett said, I found 1,000 of these things that are owned, they're orphans. Like one guy owns one royalty. This is not like a royalty company owns it. Like one guy and some farmer owns one royalty.
Yeah.
Okay.
Yeah.
Out of the 1,000, I've searched, I think there's 100 of them that I could probably buy. I'm just guessing, but I mean, like, I take 1,000 now. These are like hot leads, you would call it in the sales business. And what I want to do is I want to take my royalty consulting company public, in Canada, and I want you to be on the board, and I want you to help me. And, I want you to help me with like the structure of the company and, and raising the capital and telling the story and all this stuff. And so I said, gladly. So we started doing that, and we bought a royalty on a Goldcorp asset, which is now Newmont in Canada, in Ontario. And there was a guy that owned it. It was a huge mine, but this guy owned it. It's this piece of land next to the mine, and the mine's drifting, we think onto, okay. So the guy was like, well, why should I sell it to you guys?
Yeah.
Okay, well, but this was $1.20 stock, split adjusted when we listed. We're going to give you like X amount of money, and we'll give you like, a portion stock and a portion cash. And he's like, well, why would I want the stock? And we're like, look, because as we do this deal with more people, the portfolio will swell and the valuation will go up because the diversification will go. And we're not going to be buying a couple of small ones and a huge one, and then a couple of small, like we're going to be buying a similar size, for the most part, and place them all over the world. So there's not like a bunch of them in Africa and one in North America. It's not like lopsided, right? So we're going to be spreading them out appropriately. And the guy said, okay, fine. So he did that. And then the stock, it's slowly, you see in the chart, it's not like overnight, up a little bit more. And then we bought some exploration royalties, up a little bit more. Then we bought Endeavour mine in New South Wales, okay, in Cobar, okay, beautiful, luxurious Cobar. And then we bought a Pan American silver royalty in Argentina, Joaquin. Okay, how did we buy all these things? Let me make this really clear, okay? Pan American didn't sell us a royalty, okay? Another company had a royalty on the Pan American mine because they, it was from the mine discovery, right? Long time ago.
Yeah.
They ended up with this royalty and then they traded it to us for stock. Do you see how this goes? Okay, so a little bit of stock, a little bit of cash, whatever. But this is how we built the company. And to do that, you have to be a responsible steward of the stock. You can't be, like loose, fast and loose with the stock. I mean, you gotta grow. The stock needs to, like, I'm not saying always go up. It's not possible, but the stock, you can't be doing deals that are stupid, like you overpay drastically for something and then have to later lower the price. People do it all the time, by the way, all the time. Like we go in, we bid 20 million for something, and then some other guy with a big checkbook buys it for 30 million. And then a year later says, you know what, it turns out it was only worth 20. So we have to take a charge for that. That shareholders pay for it, because you can't do that, because you're trying to use stock to get people to sell to you. These are reluctant sellers. They don't want to sell. So they trade it for stock, and then they can have the stock and give it away to kids and sell a little bit here and there, and they have flexibility. And the stock goes up as you build the company. Over 60 royalties now. 4 years, 20 transactions, 63 royalties. These are major companies: Newmont, Pan American Silver, Agnico Eagle, Barrick, Kirkland Lake. I mean, this is Australia.
Because the Fosterville gold mine is down here in Victoria.
It's awesome. Yeah, it's awesome. So we found a royalty on the extension north and south, effectively. Like, so, as the mine grows, if it grows onto our royalty, then it's a highly productive gold mine, one of the most profitable in the world. And one of our competitors paid an absolute arm and a leg fortune for a royalty on the current mine, but the current mine doesn't go forever. I mean, it moves, so and so we found a small company that owned a royalty on the extension. We offered them stock for that. They thought about it, finally decided they would do it. And so we did a cash and stock deal to buy that. And so that takes, this stuff takes forever. I mean, there's no listing service online. Let me get some royalties. Here's about what I want to pay for it. Forget about it. It's all like, takes years to get this stuff done. So because there's an immense amount of work that we don't have to go into, but it's you got to build a pipeline of transactions. You got to evaluate these things. You got to have a huge amount of effort, due diligence. You really got to make sure you know what you're buying. You're not forecasting, higher prices. You're buying it for like what's proven today. You're not speculating. It's not a gambling business. Because let me tell you something, the royalty business, when you look back at this period in time, okay, because a lot of people now have copied us, which doesn't bother us at all. But let me just tell you, it's not about the deals you do that work. It's about minimizing the deals that don't work. So you buy five, you buy 5 assets and they're great, and then you buy a dog and you way overpay for it, and it wipes out all those good deeds. Yeah. Okay. So Metal has had 20 transactions, 0 write-downs. Okay. 0. Now, I mean, look, eventually something can happen where you can have, you have a flood or something. I mean, nothing can be done about this, but you're not trying to get out of like nature mistakes. I mean, if something natural happens, but what you don't want to do is say, turns out we overpaid for this royalty on a junior mining company that was heavily indebted, that hedged out all their gold, and then needed more money. and couldn't raise it to the market and went to 10 cents and stopped producing and got sold to someone and they shut it down. And see what I'm saying? Now you pay 20 million for that. It's worthless. That's not worthless. It's just not worth what you paid for it. And so you can't do that. And so that's all that's my management team. That's not me. That's my management team these people are so cheap. You go to dinner with these people, they're negotiating with the waitress. And I say, listen, this is my team. Don't mess with these guys. You let them negotiate the price of the steak. It's what they do. These guys are the royalty people are the most organized with their approach to buying an asset of anybody you'll ever meet in the whole world. They think of everything because it's all about, you make that error, your career's in jeopardy. Okay. So my point is that's my team and they're very good and I mess with them, but I love them. They're the guys. If I didn't like them, I'd replace them.
I like that. What I want to know though, because going back to my original question, we talked about physical gold not having a return.
Yeah.
But the leverage within a royalty business, and there are a few out there. What I want to know is for people that are watching this today that say, I'm not getting any interest from my bank. The stock market's on fire, so I'm just going to keep speculating in that. Personally, I think it's a little bit hot at the moment. The royalty streaming business that you have, I want to know why that may be a good opportunity or it's an option. It's not what they should.
Well, let's just say why. Let's just, instead of recommending it, let's just say why it's my favorite, because I can say, because we're not encouraging anyone. Okay. Now, gold price, $1,800, let's just say, to keep it simple, goes up to 2,000. So if you bought an ounce of gold, it goes 1,800, 2,000, you made $200. You're thrilled. Okay. You barely cover your brokerage cost. Okay. The royalty company, picture a Microsoft Excel sheet, with all those columns, and you forecasted $1,800 gold for 20 years because the mine is going to go 20 years. I mean, this is how it works. They have a plan. They're going to stick to it. Doesn't change really. I mean, it can, but rarely. And you forecasted 1,800. Now, input 2,000. All of a sudden, it was an 8% return. This is in finance school. This is net present value of future cash flow. It's dramatic. I mean, like year 20, that extra $200 is worth a fortune today. You thought you were going to make 8% for 20 years. Now, with $200 more in gold, you're making double digits. Do you see? So each $100 increase in gold, the royalty company will say, we have X hundreds of thousands of ounces of proven and probable gold or measured indicated gold in the ground. We know that. That's the companies have proven that. It's not on us. Don't believe us. Agnica Eagle says they have 100,000 ounces. Okay, that's on them. They have it. So we have a claim on that. Okay, we have 1% claim. So you add up all these claims. We could tell you at any time how many ounces we have claim to in perpetuity. Okay.
Yep.
Put a number on that, 1,800. Now put 1,900 on it. Now put 2,000 on it. It starts getting bigger and bigger and bigger. So you don't need giant gold prices to be successful if you paid the proper amount for the royalty. I mean, if the royalty is worth 20 million, you paid 50, then yeah, you do need $3,000 gold. But if the royalty is worth 20 million and you paid 18 million because the royalty owner wanted your stock, you're in a good place.
Okay.
Make sense?
Yep.
Yeah.
It makes total sense. What I want to do as well, because we are running out of time, we've got a couple of minutes. What I want to say is, you did say, and we did talk about it briefly, the gold price, everyone's always asking about it. You called 2,500 at the end of the year. You've mentioned that before, but let's look at a bigger long-term picture. Is the trend is our friend? Is the trend, do you feel, stronger prices in the longer term? Bit of a pullback at the moment. Do you see this as like the department stores on sale? What would your
advice? I mean, where were we a year ago, right? I mean, you look at like a double-digit return. And people say, well, I'm totally unhappy with that. It's like, well, wait a minute. I mean, what happened? I mean, you get zero in the savings account percent, right? Property, you're thrilled about the property at 2% or something. I mean, you get double digit over here and you're mad about it. I mean, it doesn't make any sense. Okay. The people say, I got to get rich now. You know, I don't have any time for saving and investing. I need this to happen quickly. So, okay. The gold price is in an uptrend. This is a secular uptrend. Okay. So that's important to know. The commodities are going higher. You can see it in all the charts. The gold price ran early. It's pulled back now. I expect the gold price to go higher. You know, I'm in the penalty zone for my end of the year. We're missing this. So let's stay away from dates on stuff. Okay. What I can tell you to watch for is the gold price is going to sit in this range as long as there can be paper market activity. And when that runs into trouble, it's going to go higher.
Right.
That's what we'll see. And so let's watch that market and let's see how long it can sit there. And if you want to buy, if you can't resist, you want to buy tech stocks, do it. It's all about percentage allocation. It's all about taking your life as a pie. You know, the problem is people, you know, you speculate, you take a little bit of money and you turn it into a big sum of money. That's a speculation. People do it opposite. They take a big sum of money, speculate, turn it into a little sum of money, and then they're mad about it. So get your pie chart and say, I used to have 20% tech stocks. Maybe I'll go to 5. I don't know. I used to have 1% gold. Maybe I'll go to 2. Whatever your numbers are, play with them. Look at it on paper. When's the last time you looked at all your assets in a spreadsheet on paper? Maybe never. So, I mean, I do this about 4 times a year because you want to make sure things aren't crazy. I mean, you know, say your property goes up drastically and you realize, God, I mean, I own almost no stocks. I mean, yeah, I got to have a few stocks. I mean, you know, there's good companies out there and they do sensible things. Like I bought my kids Campbell's soup stock. And people said, why'd you do that? It's very stupid. And then there was a pandemic and everybody went out and cleared out all the soup and the stock went up in the pandemic. It went up. So my kids didn't even thank me for it. They're too young. They don't even like soup. So they're too young to eat it. So, but my point is that there's sensible companies, you know, and I didn't buy an amount of Campbell's soup that was consequential. You know, I just thought it was like a nice thing to buy kids because then you give them, you know, goldfish and soup and crackers and stuff and pretzels, and you say, hey, you're a part owner of the company. So anyway, my point is that this is how you got to look at things, and when you look at them going forward,
look at your pie chart, portfolio, get educated, be resourceful, buy E.B. Tucker's book. How can they follow you? And tell me how. So also Nova Royalty, you know, which in Canada is NOVR. That's copper and nickel, and the green energy revolution can't happen without it. So NOVR is Nova Royalty, MTA is Metalla. Why Gold Why Now is the book on Amazon. You can get it on Kindle. You can get it in a soft cover paperback delivered to you, printed most places in the world. You can listen to it on Audible. You can see at the end of the book. Once you get to the end, I have a link, a special link. You click on it. It goes to my LinkedIn. You request me. I put out press releases for the companies so that you can see what's happening. I put out interviews like this one so you can keep up to date. I don't have a day job. I don't do any solicitation. I don't need your money. I'm just, whenever I have something like this, I'm going to put it on there. And that's the best way to keep up with what's going on. And take a journey with us, and we'll come back and see how things panned out around the next holiday. Yeah, maybe it'll be Valentine's Day next time.
I'm always, it seems like the 4th of July, Thanksgiving, Valentine's Day, you know, Arbor Day, or whatever.
EB, it'll be close to it. I'll get you back on the 4th of February next year. We'll see how we're tracking then.
Okay. Fantastic.
Great to chat with you today. Thanks for joining us.
Okay. Talk to you soon.